Welcome back to another episode of Smart Money Moves, Fresh Minds, the podcast where we break down financial strategies for next-gen investors. I'm Wesley.
And I'm Joe. We are here to make money make sense. Today, we're diving into one of the most common questions that we get. What's the difference between a Roth IRA and a traditional IRA?
And more importantly, how can both fit into your financial plan?
So let's go over the basics. An IRA or an individual retirement account is a tool to help you save for retirement with some tax advantages.
There are two choices, traditional and Roth. Both help you invest and grow your money for the future, but they handle taxes very differently.
With a traditional IRA, you can contribute pre-tax dollars. That means you may get a tax deduction the year you contribute, but you'll pay taxes later when you start withdrawing in retirement.
And on the flip side, with a Roth IRA, you contribute after-tax dollars. There's no deduction up front, but the trade-off is very powerful. Your money gets to go tax-free and you withdraw it tax-free in retirement.
So it's kind of like, do you want the tax break now or later?
I say I want mine now, Joe. But let's talk income limits and contributions. As of 2025, you can contribute up to $7,000 a year to either type of IRA or $8,000, which includes an additional $1,000 catch-up contribution if you're 50 or older.
But here's the catch. Roth IRAs have income limits. If you're single and make over $161,000 or married filing jointly over $240,000, your ability to contribute to a Roth gets phased out.
And traditional IRAs don't have income limits to contribute, but the deductibility of those contributions can phase out if you or your spouse has a workplace retirement plan like a 401k.
Translation, if you're a high earner, a Roth might not be on the table, at least directly. There are workarounds, though we'll talk about backdoor Roth IRAs in another episode.
So when should someone choose a Roth over traditional or vice versa, Joe?
Great question. If you're early in your career and your income and tax rate is relatively low, a Roth is a fantastic move. You pay taxes now while they're cheap and enjoy tax-free growth for decades because we don't know what taxes will look like in the future.
But if you're earning more now and expect to be in a lower tax bracket in retirement, a traditional IRA might make more sense for you. That way you get a tax deduction now and pay lower taxes later when you go to withdraw the money.
It's really a bet on future tax rates, yours and the government's. And spoiler, no one knows where they are going.
And if you think you'll need the money before retirement, Roth IRAs are much more flexible. You can withdraw your contributions at any time without penalty, but it's not the same story to the earnings.
Another thing to know, required minimum distributions, or RMDs as we like to call it.
Traditional IRAs force you to start taking money out at 73, whether or not you need it, and yes, it's taxable.
Roth IRAs, no RMDs during your lifetime. That makes them a great estate planning tool.
One more difference. With Roth IRAs, you can't deduct contributions, but you don't have to worry about taxes later. With traditional IRAs, it's the reverse.
Bottom line, it's not about which one is better. It's about which one fits your current situation and your future goals.
All right, let's make a quick recap here. Roth is tax now, your contributions, and the withdrawals are tax-free later. It's really great if you're younger or expect higher income down the line. Like if you're a young professional, Roth is probably the best choice for you.
Traditional equals tax later, tax break now. Great if you're earning money today and want to lower your taxable income this year.
And remember, you can actually have both, just not more than the combined limit. So that's a combined $7,000 per year if you're under the age of 50. But a blended approach can offer the best of both worlds.
That's it for today's Smart Money Moves, Fresh Minds. If you found this helpful, share this with a friend who's confused about IRAs.
And if you've got a money question you want to answer on the show, you can go ahead and reach out to Joe and I at Black Diamond Financial Solutions.
Until next time, I'm Joe McGloin.
And I'm Wesley Humes. Stay smart, stay curious, and keep making fresh money moves.